Hey, good morning, everybody. It's Brian. Hope you're doing well today. It's Friday, so have that going for us. Another coming into kind of an interesting market today. It'll be kind of wild to see what actually comes out of the day, but we're going to get to that in just a minute. Just want to remind you up front, next week, so all of next week, I'm away from my office. We're taking a little family holiday. Going to get out, do a little R&R, and don't plan to do daily videos. I might do a video here and there if something inspires me to talk about some random trading thought as it relates to something else. But beyond that, don't expect to have the daily morning updates as we've been doing for the past year. So just want to remind you about that. Let's go ahead and jump over here into things as we get started. Just that's weird. My screens aren't showing up. Why is that not showing up? Well, let's just start over here and we'll see if we can sort out what's going on with this other display here in a second. Looking at the forex market as we're getting started here. We're a little bit early. We've still got about 5 minutes until the U.S. foreign exchange session, trading session begins. But in watching this so far, the euro has been on a pretty good rip. So just euro, very strong currency as it relates to our others. So pretty much everything euro related, if we go over here, has moved, at or around what its typical range would be. So, as far as jumping into something like this as the new session begins, I don't know how much is really, to use the word, left in the tank. Do we still have some gas for it to move further? I mean, it's pretty much moved its typical range. With that said, though, down here, all these currencies have just been kind of trading together. We have some currency. Didn't switch back. Down here, looking at these currencies, our weaker currencies, we have a lot of stuff that's just been trading together because the focus has been on buying euros. So buying euro, buying Swiss. So focus has been up here. And there hasn't been a lot of activity on these other currencies down here that are right now considered weak currencies, but they're only weak because they're weak in connection to the euro or the Swissy. If we were to eliminate these, we'd see a little different display of what these currencies look like. But ultimately, they have been moving fairly together, and what we've got here is we've got some currency pairings that are typically pretty volatile that haven't seen any movement at all to speak up for the day. The pound CAD, for example. I'll just drag this over here so we can see it. Pound CAD. Typically we're into that into that 115, 120 range for average movement. It's moved 46 pips for the day. Might be some opportunity there from a breakout perspective. Just looking at both sides of the coin, not really knowing which way it's going to go, because as the new forex session begins and we have live trading around the Canadian starting and around the USD, it's going to drive certain things in this market. It could push the CAD lower, it could push the CAD higher. Either way, we don't really know, but we could look at just straight up breakouts and bracket and order in. If it breaks above a certain area, we're going to buy it. If it breaks below a certain area, we can sell it. And we're going to kind of talk about something similar to that here in just a second when we get over to the futures market. But so where we are here right now, the trend has been down. So ultimately, to trade with that trend, that shorter term trend, this is a 5-minute chart, we could look for selling opportunities on the pound versus the Canadian as it gets going, just simply because we've got such a low range for the day. And the sell order would be, it'd be in the direction of the short-term trend. It would also be in the direction of what we're seeing with the volume detail as well. So that's one to look at. Also, the pound versus the yen is another one to consider. It's moved 61 pips on an average of about 100 to 120. I think the opportunity though is in that pound CAD, because it's typically pretty darn volatile, and it's moved a small fraction, so less than 50%. What are we at, like 48%, 45% of its typical range. Oh, heck, more than that. Anyway, 40%. It's moved significantly less than its typical range would be, so that creates opportunity for us, right? Moving over to the futures market, which is over here. Moving over to the futures market, having a look at what's going on here. S&P pulled back a little bit right at the close last night. It's been struggling. The S&P's been hanging right around 3,200. This morning in off hours is pulled back up. It's gone as high as what, 3209, 32. Yeah, 3209.50. But we're still in a pretty tight range. 4 hour buy. Oh, dang it. What's up with this? Huh. What is going on? I don't know if you guys are seeing the right screens or not. It doesn't seem to be moving for me. Let me try this. Huh. Well, I don't know what to make of that. Give me just 1 second. I can't tell if you guys are actually seeing my screens or not. I think a screen's popping up. I just don't know if it's the, there we go. Okay, let's go over here. Here we go. All right, so my display is right. Hopefully it's right on your side too. 4 hour bias is long. 30-minute bias is long as well. So with that said, we'd be looking to trade with the trend, to trade with the bias, we'd be looking for long trading opportunities. What's a long trading opportunity look like? Well, a couple of things. It could be a break of 3210, but we'd want to wait for that as the regular session begins. Or it's a break of this top level up here, which is 3218. 3210 is more of an intraday level, just kind of tops of where we've been under regular trading sessions for the last two sessions. But really the support, the resistance line up here on a 4 hour is our top edge is this 3218, 3220 area. So that's really the breakout, would be here, and see if it can continue further on from there. If it breaks through 3218, 3220, see if it's got legs to keep moving. The next stop would be 3243, 3245 area. So but a lot of potential for movement if it breaks it. That'll be interesting to see. It's got a lot of momentum coming into the morning. We'll see what actually happens when regular trading hours begin. We'll get to some other thoughts on this in just a second, but that's trading with the trend. We'd be looking for long opportunities. So looking for long opportunities, and so one idea is breaks of key levels. So on an intraday basis, 3210 has been resistance for us. We can see if we break that, take it long from there. But on a 4 hour basis, on a longer term basis, 3220 is our top edge. So a breakout from there. Counter trend trades would be a sell off of 3218. It's been seeing this as resistance quite a bit. So a counter trend trade, instead of buying on that breakout, the counter trend would be looking at that top edge and flipping it and saying, hey, I don't think it can break through there. I'm going to short it from here. Nothing wrong with that. We talk a lot about trend trading, and that's everything that's set up and we follow when we're talking about the trades every day and doing the trade reviews. It's all around trend trading. It's all around trading with that overall directional bias. It's okay to not trade with the trend as long as you've got a plan around it. Have a plan and trade with a stop loss, for God's sakes. So, if you're either way, whether you're trading with the trend or you're not trading with the trend, trade with the stop loss. But if you're looking at that top edge for a potential reversal, be prepared for it to break through there, because you've got the momentum, the overall bias is up, right? So if you're looking to sell off of a top edge, how far against you are you willing for that to let it go before you call it and say, hey, this is just going to keep barreling on in the direction of its overall movement? We have likened it to a freight train before, right? You don't want to just jump out in front of a freight train. But there are some points, if the freight train's been slowing, for the last 2 miles, and visually you can see it's about to stop. Well, standing in front of it down the tracks a little bit, you've got a much better chance of not getting run over than you would if you just jump in front of the freight train when it's never hit its brakes. So kind of the same thing here with the S&P, with this market, is we've got a freight train that's just moving, and it's slowed down last few days. It's been hitting this area and it's been slowing down, so the brakes are on, and there might be an opportunity looking at that top edge where it's been seeing resistance before. That might be the spot where you could stand and not get totally flattened. Now, does it mean it's going to stop? No. It might have hit its brakes and been slowing down, and now it's the engineer is starting to roll back on the throttle. We don't really know, which is why you use a stop loss. But we'll see. The trend is long. The trend is long. The overall bias this morning, looking at the 4 hour and confirmation of the 30-minute, the bias is long. So I think the safest thing is to look for those long trading opportunities. But with that said, top edge, 32.18, 32.20. If you want to be a contrarian, you could throw a sell order in up there, but be prepared to be wrong if it goes against you. I would cut that pretty quick. All right. Over on, excuse me, I don't know where that came from. Over on crude, we're in a mixed bias. So crude has been struggling with 41. We've been talking about 41 for a few days now. 41 top edge. Yesterday we talked about if we got a good push, looking to break out. We gave a couple of areas yesterday when we were talking over here in the morning. We talked about breaking, over here of 40.90, and then of course 4100 is that top level. As the session got going, we saw that. We saw a nice momentum burst, even pushed through 41, but then couldn't hold above it and has come back down. And now today, opening coming into the regular trading hours here in about an hour and a half, we've got the biases are mixed. So our 4 hour bias, which is long, is contrary to our shorter term bias, our 30-minute bias, which is short. So we've got mixed bias here. So that just tells us, hey, let's sit on our hands for the day and not worry about what's going on until we get some confirmation that either this is turning and this continues to push lower, and that's going to take quite a bit. I mean, we're going to have to break down really in order for this to flip, probably down below 30, 39.50, 39 in order to start to see a reversal to where we're seeing that 4 hour bias begin to show us a short bias along with that 30 minutes. So it's going to be a while. Well, I say it's going to be a while. Hell, it can happen overnight. But right now things are mixed, and that just tells us, hey, there's no clear direction. Let's just stand back and wait for the market to give us a clear direction. All right. Gold's interesting, mixed bias today again. Yesterday we were looking at this 1810 area, and then price just fell off after kind of mid-morning. Price just fell off. Did come down to around 18. It broke through it, but 18's been that key level for us. 1795 we can see on our right here on our 4 hour, which has been an existing support level for us. Came right to it and now has bounced off of that and is continuing back up. Biases are mixed this morning. I mean, we've had a really nice run. Look at the 5 minute, look at the 30-minute, really nice run in overnight right now on gold, but the bias is mixed. I mean, we could be coming to this 1810 and seeing that as a resistance point where it reverses off of it again. We don't really know. I'm a little bit of a gold bug, so I like long gold more than short gold. So have a little bit of a personal bias there. But at this point right now, technically we're mixed. Until this green crosses over the red, and that's something that's quantifiable, right? It's not subjective. Right now we can say, hey, this is an upward trend. We can see that very clearly. Short-term trend is up, but in order to have a trading process, in order to have a trading system, in order to have a trading method, whatever you want to call it, you need to have quantifiable triggers that occur that say if this crosses this, or if this, if price moves to the top of this Bollinger Band, or if, RSI, or whatever, if it breaks out of the Ichimoku cloud, there's no right indicator. But you need something quantifiable that dictates what you do. That's why you use indicators. The indicators are just simply some measures that give you a way to filter the market so that we can make a decision based on something that's quantifiable, versus just looking and allowing our little monkey brains to formulate some pattern that we think is gonna happen, and then taking an action. Sure, okay, we can get lucky doing that, but we can have we can provide better luck for ourselves over the long term if we have something quantifiable and consistent that we can apply time and time and time and time and time again, right? So that's the purpose of having using indicators. I only use a couple. I mean, we keep it super simple. But so anyway, that was a long tangent to say, hey, gold's in a mixed bias. So there we go, gold's in a mixed bias. So we're gonna stay on the sidelines with gold, just like we are with crude, until we get a confirmation that we've got both moving in the same direction, and the biases are confirmed, which allows us to look for a certain directionality, right? So anyway, let's go back over here. And so there's gold, mixed bias technically until we see this crossover, and it's good to have those things because it keeps you out of the market sometimes, and that's coming back to that Kenny Rogers song. We need to know when to hold them and know when to fold them, right? And sometimes we just need to know when to stay out of the game altogether. So that's it. We talked about the S&P. Long bias is where we are here. Crude and gold are both mixed bias. Now, the big thing I'd like to point out is if we go and we look at all the indexes here, this is really interesting. We've got the Dow here at the top left. We've got the S&P at the top right. We've got the NASDAQ over here in the bottom left, and we've got the Russell in the bottom right. If you look at this, and it's a little bit squished because what I have here is some of the indicators are showing us where previous lows were, so from earlier in the week. So there's been a lot of movement. But the thing that really catches your eye when you look at these all together is that all of these have, well, with the exception of the NASDAQ, but the Dow, the S&P, the Russell, all have been stuck in a range here. They've all been stuck in a range that's about 30 to 40% of their typical average daily range. So last 2 days, very range bound. The Dow has moved about 60% of its typical range, which again, significantly lower than what it would typically do. And this is a textbook setup for a mean reversion trade. What's a mean reversion trade? Well, it just means it's kind of like a rubber band. Well, not really a rubber band in the aspect of snapping back, but it's snapping back. So you've got something that typically has this wider range for the day, wider range of movement for the day, right? And then all of a sudden, for multiple days in a row, it doesn't move. Same thing we see in crypto, by the way. It doesn't move. It doesn't happen that often, but when it does, it's a beautiful setup. So now we've got something that typically has this much movement, but it's only been moving this much. So that's kind of a setup for some, a potential big move, right? Doesn't mean it will. Doesn't mean it will move a lot, but it's kind of inverse of what we look at on the forex side of things. Well, not really inverse. It's the exact thing we're looking for. You've got currencies that haven't been moving, and at some point, they're going to return to that average range. The average range is the average range because it's, if we look at the last 100 days, that's what this thing typically moves as. And we've been moving a small fraction of that. Now, we don't know which way it's going to go. We have no way of knowing, are all these just going to go up? Are they all going to go down? We don't really know. But what we could do is bracket orders in around our tops and our bottoms of these and say, hey, if we break out of the top of this, we want to take it long. And if we break out of the bottom of this, then we want to be able to take it short. So there is a way to capitalize on this range-bound market that we've seen here and look for a breakout and a return back to that average range. So just something to consider. It's a little bit different of what we've talked about, but we haven't really experienced this in a while, where we've had these multiple days in a row where we've been moving at a small fraction. And 30%, the Dow and the S&P, they're both sitting at about 30% of their typical average range of movement for the last 2 days now. So I would expect some volatility here today. It's Friday, and anything can happen. Anything can happen. The big thing is don't try to front run it. If you're gonna have that play, put the play on, bracket the orders in. But again, like I've said before with everything else, be prepared to be wrong. It's very possible that it pops through the top and it fills it, and then comes back and stops you out, goes through the bottom, fills it, comes back, stops you out, and then it makes its move, which can be really, really frustrating. But at some point, and no one knows when, it's a big thing, no one knows when, but at some point it's going to return to its average. And when it does, there'll be a lot of opportunity there for a patient trader to pick up on. So that's, let's talk about crypto. I haven't talked about crypto in a couple days. Let's pop over here real quick. Crypto, before I wrap things up, it's kind of a similar thing we talked about here in Bitcoin and Ethereum, where we had an upward trend. We're an upward trend, but we were talking about the fact that we had gotten into kind of a range-bound situation. And while the trend was up and we might look to break out for the stronger side, we also said that another play would just be to simply bracket an order in around it. And that bracket at this point, would have worked out with that pushing down a lot of momentum. And that's what we were talking about here, is that when things typically, especially in crypto, but you'll see it elsewhere as well, when things finally break out of that range, it'll break out of that range with a fairly significant move. And I say will. I shouldn't use definitive statements like that. Typically could break out of that range with a lot of momentum. And here we can see on Ethereum it did. It broke that range with a lot of momentum. This is flipped over, so technically this is flipped to a downward bias now on Ethereum. So at this point we'd be looking for shorting opportunities if you're in an account where you can short. If you're not, if you're just an account where you're accumulating, this would be a time where you're just waiting. You'd want to wait until it pulls back, and then you get another push higher that would flip this over and allow you to go back into a buying mode. For Bitcoin, kind of the same thing. We're here, had our range set up, it pushed through it with a lot of momentum. This is flipped to a downward bias as well. So at this point, we'd be looking for selling opportunities. So looking at 9,200 potentially as a sell point to see if it'll continue lower from here. Again, if same thing. If you're not able to trade both long and short, this is the time when you don't do anything. You wait for it to pull back and come down to some other key level, and you wait for the bias to flip back to a buying bias, which would then allow you to start accumulating more again at that point. All right. So I think that's everything. I think we've hit them all. Big thing today is just watch for the volatility. Don't get too caught up in stuff that's happening pre-market. If something big happens pre-market and it blows through levels of where you were looking to trade, don't start chasing it. Just when the market opens, goes, oh my God, I missed it pre-market. I've got to get in now. And now you're chasing a trade, right? Don't do that, please. You can do whatever you want. It's not my money, but I would say it'd be in your best interest if something happens pre-market and it breaks certain levels that you were looking at and you're not in that trade. You're just simply not in the trade. That's okay. It's the one that got away, But yeah. Anyway, so we've talked about trade opportunities in some things to look at in crypto from a breakout perspective. We talked about things to look at in forex from a breakout perspective. We talked about the S&P key levels. We talked about the group of indexes and potential brackets around that mean reversion trade, and then we're sitting on the sidelines for crude and gold. So that's everything. I think we've hit it all today. So I'm gonna let you guys go from here, and you guys have a great day. We'll talk to you soon. Bye. If we have trades that meet our setup criteria, by the way, so remember S&P is a long bias, so we'd be looking for long trading opportunities, and the long trading opportunities that we'd be looking for here would be those pullbacks with a breakout of a level. So I didn't run through that process today, but you've seen it in previous videos. If we're long, we're waiting to see if price can make lower highs, lower lows, and then play a breakout off of the top of that previous lower high. But yeah, so if we have that trade set up, which is what we've been following and mirroring here, I'll certainly record a video. If not, have a great weekend, have a great next week, and then we'll see you when I get back from vacation. Have a good one. Bye.